Stock earnings incentive. Favorite pastime.
So let me just say, earnings
hit it with Wall Street. It's 2.5x.
Because their compensation goes up.
Wall Street's wrong again.
Hi, it's Joel Litman at the Stansberry Conference, and I'm with Altimetry, as you know, and with our Director of Research, Rob Spivey, and today joined by the great, my go-to guy on anything gold, precious metals, natural resources, Rick Rule. Thank you for joining us, Rick.
Pleasure to be with you, Joel. Thank you.
Just a few months ago in July, you had me speak at your conference at the Rule Symposium, which is fantastic. It was in Florida. That's you've had me back a couple of times now. Thank you. And a lot of what we talked about then was that gold was hitting new highs and stocks were hitting new highs. And now it's October and it's more of the same. Gold's hitting new highs and stock is still hitting new highs. And one of the things I think we talked about is, are these things necessarily opposites, or is it possible they can both coexist? What are your thoughts on gold still hitting new highs?
I think gold, and I'm no technical analyst, my suspicion is in the very near term gold, or at least the junior gold equities, are overbought. I, very recently, and it attracted a lot of hate for me among my own community, I sold off 25% of my gold juniors.
Really?
Not the gold itself, not the senior gold stocks, but the juniors were just ahead of themselves.
Junior mines, yeah.
Well, pre-mines mostly.
Pre-mines, yes.
And I found myself in the weird position that I could sell 25% of my position and recoup all the capital that I'd invested in the sector since 2020.
Wow.
So in effect, I sold off 25% of my upside and I eliminated my downside,
Yes.
which seemed like a good print to me.
Yeah.
I think they're going higher, and I don't care what I think. I was able to eliminate my risk.
Yeah.
If you're 72 years of age, which I am, the idea that you can give up a quarter of your upside and take away all your downside is pretty good arithmetic.
Yes.
Yeah, taking money off the table when you can is not a bad thing. At Altimetry, we always talk about the idea when a stock doubles, we actually generally sometimes will cut it in half, because we'll basically say, take your money off the table and let the rest of it run. So yeah, it makes sense.
I used to do that, but then I was hanging out with this guy. I think you know him, Joel Litman. And, sometimes a stock is doubled, and you look at the reasons behind the double. I think when you have a double, you need to ask yourself the valuation question again. Is it compellingly cheap? As an example, in my business, Agnico Eagle, who was a sponsor at the conference,
right.
the stock has doubled. We ran discounted net present value calculations on Agnico at today's gold price versus the gold price that existed at the time before it doubled. It was cheaper on a free cash flow basis after it doubled than it was before.
Yeah.
So these reflexive things that I used to do when I was young, basically out of ignorance, I didn't know how to do the value recalculation. I've abandoned. When I get a dramatic move in a stock up or down, I question my original premise, and I have a new sell decision based on that premise.
Yeah.
And by the way, I don't think you guys pretend always to get it right. I certainly don't. I just try to get it close enough that I make fewer mistakes than I used to and fewer mistakes than my competition.
That makes sense.
We found that our batting average is good, but it's a slugging percentage that we do well in. Meaning, we get ideas wrong, but we're careful to say, wait a second, we're wrong, and it's going the wrong direction, the thesis is wrong, and we've put everything into it, then there must be something we don't know, and let's cut our losses earlier and let the winners ride. Yeah. Gold long term. Gold 3 years out, 5 years out, are the biggest drivers still in play?
I think so.
Yeah.
You and I probably disagree on this, so it's a good time to have the conversation. When I look at gold, I think that gold is a play on what I would describe as real interest rates. If you think that the deterioration in the purchasing power of the US dollar is best measured by the CPI, you're fine with the US 10-year Treasury. When I look at the basket of goods and services that I consume, rather than the ones in the service, rather than ones in the index, since 2020 at least, the goods and services that I consume have increased in price at about 8% compounded. The CPI is an example. When it's inconvenient, it doesn't consider food or fuel. Now look at me, Joel. Any index that doesn't include lunch, I got no use for it, right? It's hedonistically adjusted.
Yeah.
But the stuff I buy is not hedonistically adjusted.
You're consuming what you consume, so a consumer index should reflect that.
Check this out. As a cost of living index, it doesn't include tax.
Yeah.
If I didn't have to pay the tax, I wouldn't bitch so much about the index, but that's not on offer. So
Yes.
I believe that the U.S. 10-year Treasury pays you what, 4.5,
Yes.
in a currency where my purchasing power is declining at 8.
Yes.
Return-free risk,
Yes.
as Jim Grant calls it, an absolute government guarantee that you'll lose 3.5% compounded for 10 years. Why would people be concerned about the maintenance of their purchasing power in the U.S. dollar? Because it's guaranteed.
Yeah.
I went through the decade of the 70s,
Yes.
cognitively went through the decade of the 70s.
I was there. I was around.
Yeah, kinda. I mean, the price of gumballs went up and you complained.
Horrified.
At any rate, the point of this is, according to the Office of Management and Budget, in the decade of the 1970s, the U.S. dollar, in an absolute sense, lost 75% of its purchasing power.
Yep.
I believe in the next 10 years, the U.S. dollar loses 75% of its purchasing power.
Yes.
There's a lot of ways up the hill. You know, that whole period, 68 to 82, Buffett made 23, 24, 25% compounded. It doesn't have to be gold. But if you aren't as smart as Buffett, and I'm not, gold gives you comfort. It's not coincidental in the decade of the 1970s that the gold price increased 30-fold. I am not, by the way, suggesting it's going to increase 30-fold. It's already increased 12-fold.
Yes.
But I believe, Joel, just
8,000 gold is not crazy by
my
any means.
gut tells me that the increase in gold price could mirror the deterioration of the purchasing power of the U.S. dollar. Ipso facto, the dollar loses 75% of its purchasing power. Would a three-bagger, in a nominal sense, be out of line? Not at all. And by the way,
So far more than 8,000. 12,000 plus, yes.
yeah, listen, if it was 10, would anybody listening to this podcast complain?
Right, right.
Another thing, this is absolute purchasing power. I don't think that the U.S. dollar necessarily does badly. In fact, probably does well
Relative to other currencies.
relative to other currencies and other savings products.
It could still be the reserve currency of the world.
It will
and
be.
still lose that much value that gold would
It will
reflect
be.
that, yes.
Yeah, well, listen, I remember back when I was selling Sprott financial products to sovereign wealth funds and stuff like that. It was instructive for me as an American when I would ask them why they held so many U.S. dollars.
Yes.
And, I just said, the U.S. Treasury to me, and I'm American, sort of feels like a lie.
Yeah.
You guys send us cars and steel and computers and all this cool stuff, and we give you pieces of paper with dreams on them.
Yeah.
From an American's point of view, that's really cool.
Yeah.
But doesn't this sort of feel like a lie? And I remember one counterparty looking to me and says, ultimately, yes, but a deep and liquid lie, unlike all the other lies we're told.
Well said. Well, I mean, it's I think Marko Papic yesterday was talking about the idea of also as we get more to a multipolar world, right? Central banks are going to want to own more gold as opposed to dollars or anything else. And just as you get more geopolitical uncertainty, gold becomes more of a priority for people to own because it is an asset that's not tied to any geopolitical,
Right.
one unit.
That's a wonderful point, too. I mean, 2 points. Gold doesn't have a political constituency for devaluation. There's nobody who needs to make gold cheaper to promote jobs.
Yes. Yeah.
Right? And the other is that it's very difficult for one party to weaponize. You can't control the SWIFT banking system, irrespective of what you think about Putin. You can't steal $300 billion in assets. Well, you can if the people are stupid enough to store it with you.
Yeah. Right. Right. Yes. And so why not?
Yeah.
So Russia was, I think last year was one of the biggest buyers of gold, and Poland now because they're worried about Russia. War is hyperinflationary. War is bad for all currencies, and all those are very bullish for gold. I think what resounded at your conference when we spoke was the fact that this can all be true, those drivers of gold, and yet you can still have companies, as we talked about that this year now. At the conference, it was like 300 companies had doubled in price, and now it's 500 stocks. U.S. listed companies have doubled in price, and so you can have that situation where the drivers of a particular company's earnings, because they're focused on building something that the world needs, whatever it is, right? Whether it's AI or we're not big on AI specifically as stocks. We like the AI enablers or the AI enabled, right? The ones benefiting from the AI, not so much the ones that are. We're not going to make a bet on NVIDIA, right? And whether or not that beats gold, but we think there's a lot of stocks that we don't think of it as beating gold. We just think we can find 20 stocks that double, we think our clients will be happy. And if gold doubles and people have a position in gold, I think they'll be very happy. And both can exist is what we've been seeing.
Go back to the decade of the 70s. Buffett punched the lights out. He found companies that had what he described as moats. He found companies that did things better than other people.
Yes.
And they were companies that had pretty high returns on equity that could be leveraged but weren't leveraged.
Yes.
It was good old-fashioned green eye shade stock picking, bottoms up stuff. Don't worry about the market. I don't believe myself the market's a subject.
Yes.
I believe it's a facility.
Yes.
It's a place where you buy fractional ownership of businesses.
Yes, yes, exactly.
Absolutely.
You're
I
getting
mean, what
pieces
you
of
guys do,
businesses.
particularly where you do it internationally,
Yes.
hugely valuable.
Yes.
Hugely valuable.
Rick, do you like gold itself, or do you really like gold equities or gold related? Let me say it that way. Whether it's stocks or, because there have been some fantastic, Newmont's up 100%. In that list of stocks that are up 500, the 500 stocks that are up, there's plenty of gold stocks that are up, right? More than double, right? So.
You can thank me now.
Yeah. That's right. That's right. Do you lean more towards just gold or gold equities?
It depends on its purpose in your portfolio. I personally save in gold.
Yes.
I maintain liquidity in US dollars. And I need to say right now that the set of circumstances that I'm talking about, I hope doesn't come true. The set of circumstances that makes gold come true can be harmful to other parts of people's portfolio.
Yeah.
Negative real interest rates is not a good place for savers, and I like savers.
Yes.
I'm an investor in the gold stocks. Those are different parts of the portfolio. There are some companies that are better at finding and producing gold than others, and I spent 50 years trying to learn how to do that.
Yes.
Sometimes I get it right. So in the investment part of my portfolio, I own gold stocks where I think that they can outcompete other companies in the sector. In the insurance or savings part of my portfolio, a financial planner would look at my account and say, you're out of your mind owning gold. I'm the largest individual owner of Sprott, a brand name for gold financial services.
Yes.
A financial planner would say, you're covered, man.
Yeah.
The thing about physical gold is it actually is a soporific for me. It allows me to sleep nights and stay calm. And at age 72, that's a good thing.
Yes. Right.
Rick, as a person who specializes in the world of precious metals and metals in general, there's been a big conversation right now about silver relative to gold, right? Once again in the conversation, what's your stance in terms of silver relative to gold? And do you have to choose one? Is there one you prefer?
I think you should choose one. I think it depends on who you are. My experience has been that precious metals bull markets have the narrative and the momentum established by gold.
Yep.
The first buyer is the fear buyer. We're there, right? I mean, we're there.
Yep.
Since 2000, never mind since 2022, since 2000, gold is up 9.25% compounded every year for 25 years. It did its job. Some point in time, when the narrative has been established or verified by the price action, and the generalist investor comes into our space, leadership changes from gold to silver.
Yeah.
I don't know why. Maybe it's the lower unit cost. Maybe it's the reputation for volatility. I don't do popular culture.
Yes.
All I know is at some point in time, leadership changes.
Yeah.
The last 4 weeks would suggest that we may be at that change point. I don't consider silver to be an investment class. I consider it to be a speculative class. And I am a speculator, but if I'm going to take the speculative risk and if I'm going to embrace the volatility that one would need to embrace to be in the silver space, I would rather own the silver stocks. I own gold for insurance. I own the senior producers, gold producers for investment, and I am a speculator. But in speculation, you are going into equities where you are speculating on the value of an unanswered question, and you're speculating on the possibility or probability of getting a yes.
Yes.
It's a very, very, very different process than buying gold and hoping it doesn't go up.
It's different areas of your asset allocation of which, but when it comes to that, you like the silver stocks more than the gold stocks. When it comes to that speculative portion.
For the wild portion of my portfolio,
Yeah.
the population of legitimate silver stocks
is small.
is tiny. And when the generalist money comes in there, Doug Casey likens it to siphoning Hoover Dam through a garden hose. There isn't enough room in the silo for the money that hits it.
Yeah.
and they blow up. I've been a beneficiary of that 3 times before in my life.
Yep.
And I'm hoping to be a beneficiary of it one more time.
My last question is, let's say I did want to pursue this very old style, savings account and generate interest in a bank. Is there a bank that you might recommend that I would use?
Smooth talking devil. He's trying to get an increased speaker's fee at the Rule Conference.
I like it.
Battle Bank is now my 7th bank, Joel, as I think you know. Banking is a wonderful business if it's done correctly.
Yes.
Doing it correctly means identifying a specific customer base to serve. Don't try to be Citicorp. Don't try to be Bank of America. They're already there. Find a customer base that they don't serve that you have access to and serve it better. And that's what we do. Battle Bank is an online bank, which is great. It means that your phone or your computer is our branch. If you aren't facile with a phone or computer, there are people that specialize in dumb people. There are other banks that specialize in those people. We're not those.
Yes.
We believe that our customers are interested in interest. There are $3 trillion in deposits in the United States that pay no interest. Battle Bank will pay you interest, including on your checking.
Yep.
And not necessarily dollar denominated. Is that right?
We will. That's the next thing.
That was an interesting thing you said you're moving towards, yeah.
We built a bank before called EverBank, and we built EverBank from 0 to $28 billion. The focus product being allowing U.S. investors to save outside the dollar. Let's say you're a first-generation businessman.
Yes.
You're from Canada or Singapore or something. You live and bank in Singapore and the U.S. You need to bank in
The
in
currency.
both
Yes,
currencies.
Right.
You need the ability to change money between the two accounts at a reasonable rate rather than the 200 basis points
Yes.
that the big banks charge.
Yes, right.
So we're going to do that. We're going to allow banking facilities in 20 currencies, FDIC-insured. We are also, not surprisingly, because I talked to that community, going to be the first bank in the United States to offer credit facilities secured by gold, silver, and platinum and palladium.
Wow, great.
Chase Manhattan will do it with a $10 million minimum.
Yeah.
We will start with a $100,000 minimum and move down from there as the technology and the mass.
Oh, fantastic. Great. More power to you.
Impressive,
Fantastic.
absolutely.
With Battle Bank. That's great.
Yeah. Yeah.
We will be looking for your business.
I'll be looking for you.
Count on
That's
it.
great. That's
Once
great.
once you start doing pesos, right, for Philippines, where he spends a lot of his time, he'll be ready to go.
We actually, at EverBank, it takes a while to scale up the currency business. By the time we sold EverBank, we did business in 28 currencies. And we had, there are obviously a lot of first-generation Filipinos
Yes.
in the U.S.
Right. That's good. Well,
Yeah.
Rick, thanks so much.
Pleasure.
You're speaking tomorrow, so that'll be after this probably airs. But either
Absolutely.
way, I look more power to you tomorrow on your presentation. I look forward to
Yeah.
it.
Great.
Thank you, man. Thank you.
So much. Pleasure.